Okay, so good morning. Hope you are all well. So, just here at the open of Europe, we're just getting a bit of upside actually. So the equity markets, you see my DAX chart on the top right here of the screenshot. Just looking at a 1 hour chart. We had a step lower on Monday, of course, coming off that sort of payrolls boost high from Friday, and then yesterday morning we added to it. It's just that by the time we got to the close, equities bounced without threatening really to ever kind of break and make new highs, and we bounced and made up for the morning losses, but that was it. And then it was a pretty unremarkable session really. Now we're getting a breakout to the upside, so you're seeing the DAX kind of lead a move higher here, Eurostoxx of course as well, and the S&P following. So this is just more recovery of, for European equities, this is, I guess, and US actually, it's a recovery of Monday's losses, and Monday's losses was all about that kind of hawkish fear that the Fed are going to be hiking. Nice positive start to the day. This isn't really off any news flow at all. It's been, I'll talk about China. We've had plenty of China news overnight, but no news flow in the last sort of hour or more that's of any notes. This is more technical, I'd say, with just a little break of yesterday's highs. What's happening elsewhere is that the Bund is ticking lower. So the Bund has been making new lows for the session here, just about to test the pivot level. This was good support yesterday afternoon around this area, around 155.87. That was yesterday afternoon's low. So you've got a bit of risk on. It's very mild and not driven by any specific headline in the last few hours. So a slight positive start to the European session. Just check crude oil, bottom right, very tight. Nothing doing overnight, but very tight range just on a key support, which is the low we had on Monday. It was also basically the sort of double bottom from yesterday's session. We had a drop into the close last night. Let me just update you. Of course, it's a Wednesday. Let me just check though, because normally, of course, a Wednesday would mean we get Department of Energy inventory data, except it's not happening today, and that's because it's a bank holiday in the US. So today is a US bank holiday. It's Veterans Day, of course. It's Remembrance Day, to honor those that have given their lives in military conflicts. So this is a full-on bank holiday in the US. It's not from a market point of view, from a trading point of view, then we'll have to see. Of course, it is going to have an effect on volume. We are going to get less volume traded today because a lot of people in the States, a lot of Wall Street will not be at their desk. However, it's not there are other bank holidays that has a larger effect. For example, we got one in a couple of weeks' time, Thanksgiving. This is really when the whole place shuts down. Cash markets close. We do get futures markets trading, but it's a shortened day. That's on Thanksgiving, like a big bank holiday. This one today has a smaller effect. I think we do have cash markets trading, so volumes will be lower, but not quite as dramatically lower as you might get on some of the other bank holidays. So you've got to bear this in mind as we go into the US part of the day after lunchtime, of course. Just check oil though. I was just saying, tracking sideways right on this sort of double bottom. If I just go to a daily chart, and I'll just make this chart a little bigger, then of course we're almost down towards the bottom side of the range now. We've been tracking lower for the last few days. In fact, 4 down days in a row, followed by a doji yesterday. Now we're right back down on the lows. It's definitely still looking heavy. We've got a support, looking at the sort of violent price action at the end of August, following that spike higher. we've had a key support around 43.20. Now this got broken on the 27th of October and we dropped to 42. Let me just check the price. 42.58. So these are prices to look for: 43.20, 43 handle, 42.58. These are the key levels on the downside. Where we're finding support at the moment, these were key lows on the 14th of September and also the 24th of September. So bottom of the range. What happens over the next few days is potentially really important. Do we stay in this range we've been in for the last couple of months, or do we get a break to the downside? And ultimately, is it possible that we're going to see this 2015 low at 37.75 tested in the weeks to come? We'll see. Lots of stuff that can influence that, of course. More supply news from the US. That'll be tomorrow because of today's bank holiday delaying it. What's going to happen to the dollar's value as we head into December? And are we going to price in that rate hike or not? What's going to happen? Chinese data, which we had overnight, is important, of course, from the demand side. And commodities are weak this morning. If we just look at the two sort of data releases from China last night, and these two are really important because it definitely measures this rebalancing or this transition that China are going through from an industrialized sort of emerging market through to a consumer-driven developed market. So we've got retail sales and industrial production, both announced at the same time. Both tell sort of opposite stories, which is kind of what we want to see. Here's the retail sales data. So it came in at 11%. This is year-on-year growth, which was a slight beat. We had expected 10.9%. So it does continue this run of form that has seen, quite a consistent drift higher, on retail sales on an annualized basis. On the retail sales thing I mentioned yesterday, today it's not only Veterans Day, it's also Singles Day. I actually think, isn't it Diwali as well? Correct me if I'm wrong, but anyway, it's Singles Day today in China, and what we have, I've got a stat for you. I was talking about this yesterday, how Singles Day actually is now officially the biggest retail day of the year globally. Now, to put this into perspective, this is where a lot of online sales get done. Now we have something in America after the Monday after Thanksgiving. So this will be coming in a couple of weeks. It's called Cyber Monday. This is where people tend to have a 4-day holiday. If you include the Thursday, the Thanksgiving, they take Friday off. They take the weekend, obviously, Saturday and Sunday. They have 4 days holidaying. Then they go back to work on the Monday, and this is where you get massive online sales. Discounts. And this used to be the biggest online retail day of the year. It's now been destroyed by this Singles Day in China. In the first 90 minutes today, Alibaba sold $5 billion worth of goods. In 1.5 hours, one company, they're the giant, big one, one company sold $5 billion. Now, to put that into perspective, that is more than the entire sales on Cyber Monday last year. So in America, the whole day, they didn't sell as much as that, and one company in China sold that amount in just 90 minutes. So that just to put it into perspective for you, this is just off the scale. This will become, by the way, Cyber Monday, I don't know if you know, it was a US phenomenon, it's now a global one. So the international marketing men have definitely spun this one to be now a global event. And mark my words, Singles Day, the 11th of the 11th, mark my words, I'm almost certain in let's say in 5 years' time will be a global event, a global retail event. But it's definitely huge. So in China this morning, this is all part of this retail rebalancing, right? It's very positive from an economic perspective, obviously. And so, decent numbers on the retail sales side. However, This is the opposite picture when you look at industrial production. Here's the industrial production chart. Numbers coming in at 5.6%. Just such a massively different picture here, where we're declining, and it's expected to carry on declining. 5.6% matches that low print that we had back in March, and it's looking vulnerable to a slide below there. And if we go to, let's say, a 5-year chart, look at this trend. There's no getting away from the fact that this is trending downwards, and it's almost certain that downtrend's not going to stop. Here's on a 10-year chart. 5%'s massive. That's the credit crunch low, was 5%, right at the height of the global financial crisis. Industrial production in China on an annualized basis still grew at 5%. So we're almost back to that point now, and will inevitably trend below it. Okay, so this is why we're worried about China. This is why we're worried about their growth rate, and we're worried that, yes, okay, the consumption side is a growing story, but it's not growing fast enough to offset the declining manufacturing and industrial production and sort of export side. Okay, so this tells quite a good story, the data this morning. And what you got in equities is, so far it's been so mixed data, but so far you've seen equities perform positively as a result of this news. Okay, so this has kind of helped to just shape the morning. We've had a couple of big merger, or one particular very large M&A deal being done this morning, which helps with just general mood and general sentiment. Just talking about, well, I don't know, I was reading Early Morning Read this morning, and they touched on Liikanen's comments from yesterday. So Liikanen being the Finnish member of the ECB, and Deutsche are kind of spinning it in a way that his comments were notably more dovish, in that he basically opened the door to the idea that a QE extension is still possible. Liikanen said that we will use all tools that are available to us, and then he said that the length of the QE program, or he basically said QE will be in place until we reach our, or he said, to quote him directly, expanded asset purchase program is intended to run until the governing council sees a sustained adjustment in the path of inflation consistent with the aim of achieving inflation rates below but close to 2% over the medium term. That comment, if you want to interpret it in a dovish way, you could very much say, well, there's no way that come September next year the ECB will have engineered an inflation rate that's consistent with their aim, and so that implies, you might say, that they are fully prepared to extend the length of the QE program. So maybe I don't want to read too much into that. I mean, Draghi's talking today, so this is perhaps one of the events of the session. Maybe we'll see. I mean, I'm going to bring in the data calendar here to show you. What we have this morning is the labour market data from the UK. First up, this is at 9:30, and lots of different numbers here. We get the jobless claims numbers, we get the weekly earnings numbers, which are important. We're expecting 3.2%, which is a rise on last time's 3%. So we want to see wage growth. The unemployment rate itself is expected to stay unchanged at 5.4%. Okay, so lots of labour market related numbers. Just before we talk about Draghi, let's just have a look at cable. Obviously cable's going to be sensitive to these employment figures, and then also cable's going to be sensitive to the events of today, because what we have is a Bank of England conference, basically, where Mario Draghi is attending. So we will have comments from Draghi and Carney today. But look, cable had a massive week last week in a bad way, in that it dropped almost back to the 150 handle off a dovish Bank of England, followed by the next day very hawkish labour market data from the US. So we've been rebounding over the last 3 days, and we'll see what the labour market data, if you get really strong labour market data from the UK this morning, well then, that offsets the dovishness we saw from the Bank of England last week. And so you can see cable continue to rebound this very steep losses. Of course, if you get the opposite, bad labour market data for the same month that the US labour market data was phenomenally strong, well then that suggests a divergence. And, we continue to price in the scenario that the Bank of England is going to wait a hell of a lot longer than the Fed to start raising rates. Therefore, this sell-off last week's justified. So, cable should get some action this morning off these comments. So what will Carney say after Liikanen's comments yesterday? Well, I guess these central bankers, they never want to pre-commit, okay? They're never going to say before a meeting that we're definitely going to do something at the next meeting. They never want to pre-commit just in case economic conditions suddenly change and they end up having to backtrack and say, yes, I know we promised to do X, but we've decided to change our minds. That's the last thing they want to do. So they never pre-commit, which means, this is why you get the Fed saying that every meeting's a live meeting. Even though they said that about the October meeting a few weeks back, it's a live meeting in that rates can go up. It's data dependent. Of course, we knew rates were not going to go up, but the official line has to be that rates could possibly go up. What I mean is with the ECB, officially they're going to have to say all tools are available. They don't want to commit now to not extending QE but cutting the deposit rate, which may well end up being what they do. Their communication has to be that all tools are on the table. And so that might be interpreted dovishly, maybe. This is more Deutsche kind of spinning off the back of Liikanen's comments yesterday. But, from that point of view, I don't think you got much action on the Bund. I mean, if we look at the Bund, well, we did get some upside, but it kind of got halted early on yesterday, sort of mid-morning. Just around, I picked out a level. I've just moved this line higher now, but I did have a level yesterday. I was talking about 156.11, and in the end we got above there. We topped out at 156.19, but never. This area definitely capped the upside. It's just we never really got a pullback of any substance, and the same thing's kind of happened this morning. Or last night we went back up and closed around the high, and then this morning we've been drifting lower. The lowest point we got to yesterday afternoon was 155.88, so we'll see. We've got the pivot level in here as well. But what my point is that, yes, Liikanen made some comments, but it's not like the Bund had a really strong rally off the back of Liikanen's dovishness. And already that rally is just being eroded. So, I wouldn't read too much into Liikanen's comments. But, of course, Draghi's more important, and we'll see what he has to say. But he's most likely going to say all tools are on the table. And just be careful, that might be interpreted mildly dovishly, okay? Because we've been pricing out the idea of an extension to QE in the last week or so, since the Fed have turned hawkish and we got that payrolls number on Friday. Okay, so let me just bring back the data calendar. So UK data at 9:30, and then really it's just about, forget about anything else on this list. We got more China data, but that's tonight. So it's really UK data. Then it's just about who's speaking, and we got a lot of people speaking. So we got Draghi and Carney. So as I said, there's a Bank of England event here in London today, and both these guys will be speaking. The official schedule is 9 a.m. So I'm going to get off the mic very quickly because we may get comments coming through. Then it says 1:15 for Draghi, Constancio at 4 o'clock. So mainly it's going to be about the speakers this morning and the UK data. Okay, so I'm going to get off the mic now because we've only got 3 minutes till 9, and we might start to get some comments drifting down, either from Carney or Draghi or both. Okay, all right. So that's it from me for now. And just on the monetary policy front, we do have Yellen talking tomorrow. Let's see how we get on, guys. Enjoy this session. Thanks a lot.